Hello, ladies and gentlemen. Greg Mikulowski with the Forex. Quick look at the Aussie versus US dollar. Today's date is December 13, 2023. Focusing on the hourly chart here, what we've seen in this currency pair is largely what we're seeing in a lot of the currency pairs, and that is some ups and downs trading as the market awaits the FOMC rate decision here over the last, from about here to today's day. So that's 1, 2, 3, 4, 5, 6 or so trading days. The price has been largely in between this area right through here. We have some ceilings up through here where we had a number of different swing highs there that were retested here and here and here. And then we have some floors down here. We had some lows, a lot of lows right through here. Then we had other lows through here. We fell below the level, but then rebounded higher and reestablished support. And then retested this area right through here, and including yesterday and again today. So all this area right through here is support. So resistance up here, support down here. In between sits the 100 and 200 down moving averages, as you expect. If the market goes sideways for a number of different days, that's going to encompass about 100 bars or 200 bars, and we're seeing those moving averages move toward the middle of this trading range by sort of definition of a non-trending market. And when markets non-trend, they tend to then trend at some point. So the question comes, when will that happen? So today we have a big event with the FOMC rate decision, and perhaps that leads to some risk on sentiment, which would tend to send the Aussie versus US dollar to the upside, or risk off sentiment that sends the Aussie versus US dollar to the downside, or is it more focused on whatever they decide to do. But the defining measure of more bullish or more bearish would be how it reacts to things like the moving averages, how it reacts to this box right here, and then the other targets when we do break outside of that box. Do we stay outside of that box? So that's what you as a trader are focused on right now. And right now, if I were to characterize the market, it would be a little bit more bearish. Why? Because it just moved up to test the 100 and 200 hour moving averages. And what do? We found sellers were currently trading back below those levels. It's not by much. We could, in fact, we're rotating back toward the 100 hour moving average here as I type, or speak, I should say. And if we get above the 0.6586 level, that would be more bullish on the top side for the Aussie versus US dollar, which tilt the bias more to the upside. But right now it is a little bit more to the downside, with the price currently trading around the 0.6574 level. And if we stay below these moving averages, we'd expect to see a rotation back toward the downside, higher US dollar, lower Aussie dollar. So that's the framework for today's trading. If you want to take the risk, then you're basically flipping a coin whether the price is going to go higher or lower off of what the Fed action says. Alternatively, you can wait for the break and look for momentum in the direction of the break. If we go lower, we're going to head toward the 50% retracement, and then potentially head down toward the 100-day moving average. If we go higher and get outside of this range, and we look toward the high prices that we saw in trading in the month of end of November and early December, right through here. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.